Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
And Jim, thanks as always for having me.
Are things getting back to so-called normal? We've had the big dip. We've had the bounce back. Is it making people confident and want to go out and buy stuff at a lower price?
Well,
and is that a good idea?
I don't know that things will ever be back to normal, to be honest with you. But I digress. I don't think so. Because I know that people are looking at this. We had a short-term cycle low, granted, wrote about it. I knew a low was coming, but it's a lower degree low. It's not anything or it shouldn't be anything of substance. Let me put it that way. If it is, then, I'll just leave that alone too. But I think it's a lower degree low that's yielded us a counter-trend rally. The decline had kind of exhausted itself, just from my God, it was extremely oversold. But there's nothing, looking at the structure, there's no cycles of higher importance due. So I think that it is counter trend. I think that it's caused a calm and some hope, and that people think things are okay, and I'm sure many are looking at it as a buying opportunity. And that things will be okay, but, I don't see it that way for a number of reasons. I mean, number one, like I said, the structure is broken. Number two, there's no cycle lows in here due. And number three, what's going to fuel this thing higher? The great economy that we have? What's there to be, quite frankly, I don't mean to be so negative, but the reality is what's there to be bullish about here? Our shutdown economy? Everybody that's lost their business and out of work? I don't get it. So no, I don't see it as a buying opportunity, not at all.
Why do you think people think it's a buying opportunity?
Because, like Gordon Gekko said in the Wall Street movie back in, when was that, 1987? People are sheep, and sheep get slaughtered. Greed. Remember his speech about greed?
Oh, yeah.
Greed is good. Well, I understand, but in this case, I think greed has run its course. And I just don't, like I said, I think people have been trained over the course of the last 20 plus years. When I say 20 plus, going back to 2000, we had the decline, and of course we bounced back into an even larger bubble, following the 2002 low. And I remind people that, the monetary policy association with that rally created the housing bubble and the commodity bubble, and, the problems that came from that, that's ultimately resulted in the greatest financial crisis since the Great Depression. And then the policies that came from that created this bubble. And now here we are, and I don't think there's going to be a reinflation of another bubble larger than the one that just popped. And I think that recent history has shown that if a bubble isn't recreated, or if it doesn't extend, then it collapses. And I think that that's what we're facing, and this is a pause along the way. I just don't see this as a buying opportunity.
Low interest rates, how do they help things? One of the things a zero or negative interest rate is going to do is get you into the market because you don't feel you can make money elsewhere.
That's pretty much it. People are desperate for return, and they have been, again, for 20 years. That's, just a fact of life, the environment that we're in, and lower interest rates to try to stimulate the market. I think that's obviously a farce. It's just a moot point. I do think that interest rates should go lower here because of the cycles. But one thing I'm looking at, if this really is the economic calamity that it could very well be at some point, what I fear, and I'm watching the structure there, is that bonds set up and that we get a much broader cascading liquidation that could very well include bonds at some point. But in the meantime, and for now, I think that bonds are subject to go higher as rates go lower.
With lower rates as well, what does that do to your currency? Does it keep the U.S. dollar high or low? What's your outlook for the U.S. dollar?
I look at each asset class individually based on the cycles. There's times where you can draw a correlation, the intermarket relationship, and I say that. I mean, you got to be careful saying that because that's not entirely true. But in the case of the dollar and bonds, let me put it that way, I like to let them stand on their own 2 feet. And what I see with the dollar, quite honestly, is it's at a critical point here. I mean, I have been bullish on the dollar since 2018. I'm still optimistic on the dollar, but it's at a critical point where, if we see the right setup, we could have a top trying to take hold in the dollar. I don't think that's going to be the case. It's just I'm just at a little cautionary juncture. I think what we're going to see is a continuation of higher dollar prices. But if the structure falls in place to tell me otherwise, then I'm going to be quick to accept what I see develop there. So, I guess the answer to the question is that I think at this point that we're going to see the dollar continue higher. Short term, let me add, short term, yes, there is some weakness in the dollar. We're moving into some, a short term low. And then coming out of that low, the dollar has to perform. If it doesn't, then I think that's going to be a sign of maybe something else is going on with the dollar.
Is that because people internationally view the U.S. dollar as something that's reliable?
Well, I think it's obviously the reserve currency, and as I see things, I think that we're having, it's a function of liquidity, honestly. And so there's been the demand for dollars, which has driven the dollar higher.
What's going to happen with bonds, and are they risky right now?
Bonds, yes, bonds. I think bonds are going. Like I said, I think bonds are the cycles are still up. I think bonds are going higher. Short term, there's a low that we're moving into in bonds. So once we get into that low here, I think it's due next week or something like that. I'm not looking at the chart. Then I think bond prices are going to turn back up. From that point, bonds are also at a critical point in that they need to go higher. The cycles need to, the higher degree cycle needs to resume to the upside. If it doesn't, then we may prove to be at that point where I said that we could see a broader base liquidation and we could see some pressure in bonds and actually some, higher rates. Now, I say that, I think that would be on the long end. I don't see the short end, rates rising here, but I could see a scenario possibly develop where the longer end we see weakness in bonds and rising rates on the longer end. If what I see develops, and I don't know that, I'm just sniffing it right now. I see the possibility that coming out of this low that's due in the next week or so, that should tell us the tale there. And let me go back and add, if that develops, then I think it would happen in conjunction with a broader based liquidation in the general markets.
We'll have more with Tim Cyclesman Wood right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, with all the billions, trillions even being thrown at the equity markets and trying to save companies, is that going to have any effect on the stock market and its trend?
I fail to see how. And, I did an analysis of that looking at, the GDP and the spending in the April letter. And I pretty well proved mathematically that it's highly unlikely that spending is going to solve the problem here. And, those details are in the letter. It's just numbers. It's hard to argue with that when you look at, the math. It doesn't mean they're not going to try. The spending's not going to happen, but I think that creates yet another problem with more debt with very little, if any, effect. And so I think where we end up with that is, higher debt, lower GDP, and just a worse situation. More debt doesn't fix debt. It just doesn't work that way.
With bonds risky, and where do you put your assets right now? Is there anything that could grow?
I think there's times I had an old man tell me years ago. He said, there's really three positions in the market and people think there's one or two. Most people look at a market and they say, well, I want to be long, I want to be short. And he said there's three. He said there's times to be long, times to be short, and times to be on the side. And it's, in my opinion, this is a time to take your marbles and sit on the side and watch the show. Because obviously there's always an opportunity out there. And once the unwinding has run its course, then heck yeah, you go in with your marbles and play then. But right now, the work just suggests that, look, this is not over. People do not realize what has happened. The longer term effects of this is going to be far, far reaching. And like I said, I went through some of the numbers and pretty well showed that in the April letter. And, I think trying to go in and pick a bottom and be a wise guy here is, a mighty risky game.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. I'm speaking with Tim Cyclesman Wood. Tim, gold and silver, what's your view on those precious metals?
They remain the same. Two things. We was talking about intermarket relationships, and I said I'll let each market stand on its own 2 feet. That's very true. But then in the case of gold and some things, there are some intermarket relationships that you also rely on to confirm your work. That said, I have maintained, based on some of the commodity related indexes that I use as a proxy, if you will, the leaders And we've known, based on long-term raw materials data going back to 1800, that we have been turning down this whole bubble top that I've been talking about. I have shown the data that we have been turning down out of the sixth economic cycle since 1800. I've been talking about that data in the research letters for a year and a half, showing what's going on there. So it's been, as they say, it's like turning the battleship. It's a broad turn. And we've been watching that blow by blow by blow as that turn has taken course. And it has. And then within the context of that, there's other data that confirms that data that I've been watching, such as the Journal of Commerce data. And, all of these commodities follow that data. It's a matter of looking at a couple of things, the cyclical phasing, and either they're the same or they're not, and looking at the historical correlations with those cycles over the long term. And knowing that all of the commodities have followed this raw materials and JOC data, that is why I said that the counter-trend advance in crude oil throughout the entire advance out of the last 3-year cycle low back in, when was it, late 18, early 19. It may have bottomed in January of 19. I don't remember specifically. I'm not looking at the chart. But anyway, out of that 3-year cycle low, the bounce in crude oil, as you recall, it held on a little longer than we thought, and it, had everybody thinking their crude oil's okay, and, showed signs of reinflation, and people thought, and I said, nope. Every interview after interview after interview, I said, nope, crude oil's going lower, it's going lower, it's going lower, it's going lower. And it has gone lower. And it's broken based on those cycles. And the holdout, that I said all that to say this, everything has done exactly what it's supposed to do. The holdout has been gold. No question about it. But you know what? It still does not negate the cyclical phasing. It still does not negate those historical relationships. So here's the stretch. Yes, there's always a first time for everything. And maybe this is the time that gold is different. Maybe. But are you willing to bet that? I'm not willing to bet that. Let me say it this way. That this time is different based on all this historical data, because one by one, all the commodity-related stuff has gotten in check. The cyclical phasing all confirms one another. The price action confirms one another, and one by one the dominoes have fallen. Gold's been the holdout, and historically it's going to follow. Looking at the cyclical phasing patterns and relationships. So while it's been the holdout, I maintain that it's going to follow, and I think that's going to occur when we get into that broader-based liquidation phase. That's going to affect a lot, a lot of different asset classes, I think, including gold. So I think that has been, like I said, a holdout. It's been a source of some false hope, but I'm sticking to my guns, and I'm not willing to bet based on all the research that this time is different. So I think that what we're flirting with is, again, once we get the structure in place with the, when I say structure, I know it doesn't make any sense to someone that's listening to this interview, but the cyclical structure has to fall in place, and once that bites, then it's going to be lights out for gold as well, which is what happened, by the way, in 2008 when we got into the heavy liquidation phase, which I think is coming.
Is there any hope for the energy sector, at least short term?
Short term, we've seen a little bit of a bounce, but, these cycles have to run their course. And, until we get into more of a washout phase across the board and into some longer term cycle lows, any bounce most anywhere, I think, is counter trend. I mean, the reality is we're seeing the unwinding of the largest, most manipulated bubble in history. And it doesn't unwind in a month and a half. So we're just beginning this, I think.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com Find us on Twitter at House Street. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.